afternoon. Well, not a total surprise. I think if you said I had a crystal ball last week, it did work out before this Monday that we'd see over 500 points down in the NASDAQ. And of course, we saw it in 2 days, but actually just overnight. Well, again, listen, the markets were overbought. It has nothing to do with whether we believe or not that the markets are going down or they're going up. It has everything to do with the mathematical probability of how the markets work. Does that make sense? Does that make sense, everybody? Just out of curiosity? You got to talk to me, otherwise I can't talk. No, I don't think it's because of DeepSeek. Is DeepSeek new? Did it just magically appear and nobody knew about it? What's up there, brother? How you feeling? You okay? You better? I mean, we knew about it. Again, things don't just show up. That was not, as they would call it, a fundamental news bomb. Okay? Things don't just show up. They're part of the market. The market rallied and then it broke. But if you look at the bigger picture, okay, I mean, here, let's look at the NASDAQ. Okay, NASDAQ didn't even really get to that much overbought, let alone the damage it took today. Here, right there, we talked about this. Last week I said it needs to rally to about 22,000. And then I'd look to sell it, okay? I knew about it last Wednesday or Thursday, okay? That was in my preparation for other things. I already knew about that. It wasn't a surprise. DeepSeek, okay? Yeah, you're right. Listen, I give you credit. You know what's going on. But again, at the end of the day, the markets were overbought. They sold off. Okay. Look what happened to the VIX. Okay. After this morning, I told you every time this happens, it's a waste of freaking time. Okay. They immediately take it back down. Okay. Which is basically what you saw the rest of the day. I mean, there wasn't a lot of action. I mean, it doesn't matter that the deportation has begun and Colombia already sent back the planes and said they'll pick up the people themselves. It doesn't matter that the Bank of America is not good to conservatives, okay? It doesn't matter about the Davos globalists, okay? The only thing that matters is what you can see, okay? And without some major fundamental news bomb, and that was not a surprise. They just didn't invent that DeepSeek AI and suddenly come to it, okay? They just don't come up with these things. The markets already knew what was going on. Listen, the markets have been kind of weakish, although still being overbought, but they have not had any action until today. Okay, and today you saw a little bit of volume. This is the biggest volume bar in what, since a year almost. Okay, this is the biggest volume bar in almost a year. So the market sold off hard, and they came back already. But we didn't come, it wasn't a sell-off for a market that was in trouble, okay? It was a sell-off from a market that I said to you last week that this would be a perfect indication that the NASDAQ might have peaked anyways. But yet we still got to overbought conditions. I don't sell, would I sell put spreads? Yeah, I would sell deep in the money put spreads in NVIDIA. Okay, but we'll get there when I get there, okay? But yeah, again, I think too many think too much about shit news that doesn't mean a fucking thing when it comes to markets, okay? Unless something shows up that is fundamentally, the last major fundamental news bomb was 9/11 of 2001. I mean, 2001. That was the last major fundamental news bomb. There was no fundamental news bomb in 2008. That market was in trouble long before you finally heard the collapse, okay? I got to make you gave me an over and under. I got to get to that word in an over and under. Okay. And somebody sent me a text today. You'll find this interesting. Okay. As usual, they're way behind Bubba. America's fragile banking system. Do you see that article? America's fragile banking system. Who's been saying that for a long time? Okay. Again, people are too quick to jump on false news narratives to justify prices. Again, if you would just learn to look at the market for what it is, okay? It's a way that that money changes hands and it changes hands. Those who panicked and puked are far overdid it overnight, which you can see by the reaction, because we regained about 50% of what was lost overnight. Okay. And the Dow was up 240 points today and still going up. Okay. And the Russell, although down, was up at one point today as well. So you got to quit looking at this shit and saying that, well, it's the news. If it's really the news, then the economy sucks. Okay. I've asked this almost every week, but if I ask you now, okay, in your opinion, how is the economy? Okay. Again, good or bad? Sucks, shit, no good. Okay. So again, but the economy has been, would you agree with me that the economy has been in bad shape for 6 months, 7 months? Would anybody disagree with that? Okay. So if that being the case, but let's look at the market over the last 7 months. Oh, it went basically straight up. Okay. So again, forget about the crap. Okay. Forget about the nonsense. Eggs cost too much, that's for sure. Forget about everything. Okay. Learn to look at what you're seeing right here in front of you. That is what it's about. Okay. Every chart, if you go back and look at what I said last week, okay, almost everything I told you last week was going to happen, happened. And I'm not a predicting, I'm not a genius. I look at the tape, I look at the chart, I look at the market, I see where we are based on a mathematical probability. Okay. And when you finally learn to do that, you will do much better in your trading. You will do much better in your investing. Okay. Your investing, you can get away with a little bit more of that because you're going to be hedged anyways. Okay. So again, you have an overinflated money supply. You still have quantitative easing. You got, even though you may think interest rates are high, I mean, if you're under the age of 30 or 35, you think interest rates are high. Okay. If you're over the age of 50 or 55 or 60, these interest rates are relatively cheap in compared to what we borrowed money for back in the day. Would anybody disagree with that? Do you know when I first leased a seat, okay? When I first leased a seat to trade back in 1980 and 81 and 82, do you know that I was paying 2% a month interest on the lease? Okay. I was paying when seats were, I was paying $9,000 a month. Okay. And that was cheap. Okay. So again, you have to look at the overall bigger picture. Okay. Markets don't give a shit. Okay. First home mortgage, yours was 7.25%. My first home mortgage was 13%. Okay. So again, you cannot look at that perspective. You have too much government intervention. You have too many things that they make accessible to others. So they bring down artificial rates, okay, which and print more money, which adds to the money supply, which virtually inflates the market. I would bet you, does anybody here remember 1980, between 1980 and 1985? Okay. I'm going to say this, and you tell me if I'm wrong. The Dow Jones in 1980 was about 800. Okay. And I don't know what you were earning then, but I will say that dollar per dollar, you were living better between 1980 and 1985 when the stock market was 800 than you are today when the stock market's 40,000. How's that? Okay. How's that? Now, just a quick note. I grew up in a middle-class family. Dad was a truck driver, a peddler. My mom didn't work. Okay. Yet, put 2 kids through school, 2 weddings, a bar mitzvah, and a few other things, and lived a good life. New car every 3 years. You can't do that today. Okay. People have to have, both spouses have to work today. So again, as I said, okay, you can feed me all the bullshit you want. You can tell me how big the 401ks are, but at the end of the day, the money that you're making does not cover the inflation that we're still seeing. Now, hopefully, with the drop in crude today and with other things, and with what the new president's going to do, that'll get better. But it ain't getting better tomorrow. Okay. And you know that a lot of the regular places like Starbucks, when coffee goes way down again and their cost get cut, do you think Starbucks is going to lower their prices? I remember CD rates when they were 12%, Jimmy Carter. Okay. I mean, do you think that any of these places are going to lower their prices that have benefited from all this high inflation? No, their profits are going to go higher. Okay. Okay, their profit levels are going to go higher. This is the same old story. Okay, it happened in the oil companies with the first big oil squeeze. Everybody complained and whined. The oil companies were crying like little bitches, and of course, they never had bigger profits. Anyways, Kenny, you ready, buddy? You ready to go, kid? I'm fired up today. I'm fired up because I got out of some good stuff overnight. It was nice to wake up to some clean sheets on the futures. Anyways, the dollar. Now again, I remind you, we don't trade the dollar, okay? But we don't trade the dollar only because of the cost of trading through New York because they want to rip us off. That's the only reason we don't trade it. But if we did trade it, okay, it's actually the other Connie. He's taking notes because Connie can't do notes tonight. She's bidding tonight. She's making some big cash. She's bidding on some goods that she sells. And there is a Ken that is taking notes. But thanks, brother. I appreciate the response. Shows you're paying attention. In the meantime, we would have been short. Well, we would still be short the dollar, but I would tell you that we would probably be covering the dollar now if we were short because we would have been short from up in here. Okay. I think you're down on support. I think it's 107, and I would be looking for a little bit of a bounce. I think you're 107 to 109 on the dollar. Okay, 107 to 109. The euro currency, which we're still long, and as I said, you were going to get a 2 to 3 cent, the way I said it was you'd get a 2 to 3 penny rally, okay, which would be 2,500 to 3,750 in futures money. Oh, well, what did we get? We got almost a 4 cent rally. Okay, so here we are at a position now. I don't know that we'll be getting out tonight, okay, and taking and closing the trade. But certainly it is close. Another rally might do the trick because now you're getting to a point where it becomes extended. Does that make sense to everybody? 692 shares ahead. Yeah, that's good. Listen, I bought so much shit today. I mean, I had a margin call coming in too. So I don't, they go, you can't day trade today. I said, in one of my accounts, I said, well, I won't. But the hedging's going to take place, and you know how busy the hedging was. I don't know. I had a lot. Anyways, at the end of the day, okay, the notes, here we are. We're getting to a point of almost overbought. I told you last week, expect a rally. Okay. It's going to get back up into these upper ends, and we'll see what happens from here. In the meantime, I think you got 108 to 110, 108 to 110 in the notes. Scott, Kenny, I didn't give you numbers here. Now I remember in my own mind. Okay. I think you're looking at the top end is about 106 on the euro currency. I think support's about 104, 104 to 106. Sorry, Ken. There you go. And then notes, 108 to 110. Okay. Bonds, same as the notes. There you go. Okay. So interest rates are coming down a little bit. You know that the Fed meets this week, right? We have an FOMC meeting. Are they going to cut? I don't know how they can cut. And that's one of the things that I do not appreciate about the president that I like. I do not appreciate that he wants lower interest rates. Okay. I don't think that does any good for anybody. I think that only benefits the banks. Okay. Because we all know that your interest rates have not come down. And we all know that the banks are now making 220 basis points more than they were making 6 months ago. Okay. I know. I get it. So again, I just don't agree with it, but in the meantime, it is what it is. Okay. Bitcoin, pretty wild today. Got down to about 95,000 almost. I think it's still 95 to 105. Okay. And I still think 85 is in play. Okay. And again, I'm not bearish Bitcoin. Okay. I think it's going a lot higher, but I do think that there's going to be a reason or some selling that'll push it back down to that level. And maybe it won't. Maybe 90 will be level. But for today, 85 to 105 would be what I'd be looking at. Okay. 85 to 105. And again, it had a little bit of selling today and it came back. It was down almost 6,000 and came back to down about 3,000. Okay. Gold, Golf Charlie. Again, I'm not surprised that it sold off. I mean, it was overbought. Okay, again, you cannot be surprised. It doesn't mean that you always have to catch every one of these. And remember, an overbought situation can last for an extended period of time, just like an oversold can last for an extended period of time. We don't know how long it's going to be. And remember that these are only mathematical equations. And if I said, well, we'll sell it at the overbought and buy it back at the mean, do you know that I could sell it at $27.95? It could remain overbought and the mean can go past $27.95, right? You know that continues to change. So again, these are only guidelines, okay? I like the 10% credit card rate. It's not for me because I don't hold any debt on my credit cards, okay? But we have to admit that because of the credit card lobby, they are charging poor people usury rates, okay? They're worse than loan sharks, okay? In the meantime, gold, I think 2,800 is still resistance, which ties into the overbought conditions. I think 2,700 is support, okay? And I mentioned somebody earlier today that I have an order in working at 27.13, but I think 27 or 28 is a good guidance, good levels to watch. And we're still long gold, by the way. We have no position in silver, okay? And it's really just churning. You can see it's gone from overbought to oversold, oversold to overbought back to the mean. I think you're looking at 30 to 32 right now in silver. It refuses to move. And for those out there, might look at this and say, oh, maybe there's a head and shoulders forming, which could be bearish. Platinum, which we don't trade at all, but again, same pattern, oversold to overbought, just hovering around the mean. I would look at 940 to 980 right now, 940 to 980. Okay, now again, if you're going to trade platinum, I'm not recommending you do or you don't. I would just tell you that the reason that we don't trade it is there's not enough liquidity. So that's the reason that we don't trade it. So again, I would warn you again, if you're willing to hold on to it, if you want to trade it, and you're willing to take a position and hold it, that's a different story. You don't need as much liquidity. But if you're trying to trade it, you need more liquidity. Does that make sense? All right. Copper, which we have no position in. But again, as I said last week, I would sell it, and I did. I sold it Tuesday, okay? And I'm personally still sure that we have no position in it. But I think you're looking at 417 to 437. Okay, 417 to 437. Okay. Wheat. Okay, now I'm experimenting. For those who are doing the ratio trades with me or the ratio spreads, I did this for an experiment, okay, for everybody, because I want to add the grain markets if I can, okay? So I did today, bought 3 wheat at 535, 3 wheat futures, and I bought 535 puts today, okay? I'm doing it because I think wheat's at oversold, okay? But I also did it so I can see if I can find some more products that'll work in the future side of it as well with enough liquidity, okay? In the meantime, Kenny, they're going to be 530 to 560. Hasn't changed in 4 weeks, okay? Same levels every week. No, I'm doing a 5x3 ratio spread. It's a neutral spread that a lot of us made over 10,000 in the NASDAQ overnight because of the sell-off. Okay, we do them in a lot of the different markets controlling the underlying. Okay, it has nothing to do with insurance. It's a neutral based trade that your direction you're looking to see the market go is the direction of the futures where you make the most money. Okay. Okay, it's a ratio spread, exactly. It's a 5x3. It's my favorite trade that I've always tried to figure out a way to do it, and I finally got it down so that we can do it on our Saturday call. And we now have a product for ratio spreads as well, which there's nothing to do right now, but there will be coming shortly when there is. In the meantime, corn, okay, which we're still short. Okay, I think 490 is the resistance. I think you're looking at 470 as support. Again, I'm looking to go back to the mean. Soybeans, which we are also short. Okay, I think that we're still at 1060, and I think the support is still 1015. Okay, so really nothing's really changed over the last week. and you'll see a lot of that consistently, that a lot of things haven't changed. Cattle, oh, you're both. All right, now again, I got out, as I told you, I took my losses. I got back in when it got to $2. Okay, now I'm not in the February. I'm actually in here. Again, I'm still losing. Okay. I don't want you to think I'm not losing. I'm in April right now. Okay. I sold April at like two and change. All right. We don't trade anymore, but it is so overbought. And there's another thing that you look at, okay, when you trade commodities like this, and it's called backwardation and contango. Okay. If you look at the cattle board, okay, for those who trade it, the highest price is now 205. And by the time you get out to next October, it's 192. Okay. Also, what that's telling you is there's still a little bit of fear in the front. Okay. But the curve is telling you that it's going down. Now, again, it doesn't mean it'll go down in time for me. Crude oil is often in this position. But obviously, when the backwardation is so much bigger, which this is, that's usually a pretty bearish sign. So again, I'm not telling you to do anything with this. I'm personally short it. Certainly, I would sell it. I would sell more at 206. Okay, but now you have to respect 200 to support 200 to 206. Okay, the feeder cattle, which I do not trade, but they are in the same story in the same way. Now, again, one of the things that did happen is there was a little bit of shortage in cattle. Cash cattle is higher, and the cold weather, takes the weight off these things, so it makes them a little bit more expensive. In the meantime, if I did trade this, I'd be looking at this at about 280 as a level to potentially sell. I think you're 268 to 280 if you trade. Okay. Up 9,000 in future accounts plus options, 3K in 2 weeks. So you're up 13,000. Okay, not bad. Not bad. Not bad. In 3 weeks? Yeah. I don't know. It's not good enough for a guy like you, but all right. Good job. One of you guys is up. I can't say names, but one of you guys is up like over 50K. Anyways. Hogs. Okay. The February is coming off. So let me just show you April. Okay. Because these are really worthless to look at to trade. Okay. So again, I missed my opportunity to buy. Okay. I was looking to buy basis April 86. I missed it. Okay. I think you're 86 to 92. Okay. And if you look at these, if you know how to look at this, here, let me just show it to you real quick so you can get a view and understanding. So you see how here the prices go from the highest are today, the lowest are 6 months from now. Okay. If I go to hogs, you have the complete opposite. The cheapest is today, the most expensive is 6 months from now. Okay. It is great. It's a great trade. Listen, it's always going to be a winning trade. Not every trade, but it's always going to be a net winner over time. Okay. And you don't have to sit there and watch it either, which is another beautiful part about it. Okay. Anyways, did you see that, everybody? Just anybody got any questions on that before I move on? Yeah. All right, cool. Natural gas. Okay, we're going to roll over. You should be in March anyways, but this is February. But again, here we go with everybody in the polar vortex. Oh my God, they're going to the moon. What happened? Here was the day they started talking about the weather, and since then we've come down almost $1. Okay, we're still short. Okay, and I think there's still more room to go to the downside. Okay, I'm going to give Kenny. I'm going to change this. I'm going to give you. I want to give you March because that's the more current. Okay, 340 resistance, $3 support, 343, 340, $3. Okay, and crude 80. We talked about for weeks. Bang, zoom. Now we're at 73. I think you got a chance to go down to 70. Okay, I think it's going a lot lower. Look, if you ask me to project out a year from now, I think we'll be in the 40s. Okay, if Trump has his way. But it ain't going to be tomorrow. Okay. And I still expect to see some bounces and rallies here. But all you did was you relieved a market that was overbought for 8 days in a row. So here's the perfect example as I was just talking about. If I'd have sold the first overbought, which would have been somewhere around here at 72, by the time it reached the mean, I'd have been out at 74, so it would have been a losing trade. Does that make sense? So you still have to use discipline and stops to understand where, but the overbought, oversold conditions give you a general idea of what should happen and what your expectations should be.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.